Hey, this is Jeffrey with another edition of Stock Smart, March 8th, 2021 edition. Hope you're doing well. Hope you had a good weekend. Let's do an update on the Bitcoin correlation. So we updated our stats, again, the crack staff, which is me. And I did a index of essentially the Bitcoin and how it's correlated to the S&P 500. Is it inversely correlated or negatively correlated, or is it positively correlated? And the last time we did this, it was about 68% positively correlated, meaning when the S&P 500 goes up, Bitcoin goes up. And guess what? It's the same. It's about 70%. So continued on over 50 similar trading days, meaning Bitcoin's traded every single day. And the S&P 500 and the stock market only open on the regular trading days, not weekends nor holidays. But Bitcoin trades all the time. So 70% when Bitcoin goes up and the S&P 500 goes up, they're in perfect correlation. 30% of the time, one goes up, one goes down, or vice versa. Now, Goldman Sachs did a recent survey, and it revealed that 22% of its clients expect that Bitcoin will hit at least 100,000 in the next 12 months. Now, I'm telling my friends, I'm just saying, you know what? You need to learn about it. So if you don't feel comfortable with the investment, you should get involved in some way. Meaning, if you're just a small investor and you want to learn about it, put $100 in it. You go to Coinbase. I'm not getting any payment from Coinbase to do this, but that's one that I'm using. And you deposit some funds, and you can buy Bitcoin pretty much instantaneously. Buy a little bit and see how it does and just watch it. But it does seem, as more companies add this to their balance sheet, that it's becoming an asset that isn't going to be traded so heavily, which means it will have more value and become stable. So 54% in the survey predict that the price of cryptocurrency will hover between 40 and 100,000 in that same period of time. Stock Smart contest. We're coming up. We're going to have a stock picking contest. I think we're going to limit the age. Maybe for the first one, we're going to leave it wide open. But I do want to make this an educational tool for younger people. I'm going to have questions from them, and we'll continue to try to answer them, and we'll update people on the show how people are doing in the contest. We're going to be launching that pretty soon. Excited about it. Non-fungible tokens, again, made the news today, and we're doing a piece on it. It's going to take a little more research. There was an image of Jack Dorsey with one of the original tweets from Twitter, which was worth about $2.5 million. And we're going to talk more about how this digital art form is becoming more and more prominent. We're still oversold when we look at the S&P 500 oscillator. So this is a good time to add. We're going to get into this a little bit later. Keep adding to your positions. We're doing this value rotation. We're going to talk about that in a second. But if you can stomach it, you're going to feel poor, or you're not going to feel well if you get out of all your growth stocks. If you're in growth stocks and you've made some money in them, you got scared, you've lost 10, 11, 12% in growth stocks, it's getting washed out. It's getting overdone. The move to value is getting overdone. And I'll tell you how you can play that move to value and stay in it and maybe kind of hedge yourself with the value and adding back to the growth positions. So we got some interesting news Friday, and this is really key. Now, this is hard to follow if you're a new investor and you don't really understand this. And even people who are in this industry, probably advisors, don't understand it. The bond market's confusing. A lot of people don't understand how bonds work, how rates are adjusted, how the bidding goes. 10-year note hit 1.59, but we see the bond prices ceasing here. The Bank of Japan on over the weekend, on Friday, said that it does not intend to raise interest rates. So the Bank of Japan governor, Kuroda, said they have no intention of pushing up the 10-year bond yields above its target of around 0. So 0%, that's what you get on a bond in Japan. What that means is that we're going to get more and continued buying from foreign countries of our U.S. bond. That's going to keep the prices down. And so what's happened in the last few years, why bond prices have been so just smoked and are just so low, is because in Europe and in other countries, they have negative bond rates right now, negative interest rates, and their bonds are terrible. Some have negative 25. The Bund and other countries in Europe are really suffering with their bond prices. So what happened is all those European investors bought American bonds, U.S. Treasury notes and bonds, and that drove the prices down. But if you get Japan keeping their rate at 0, you're going to get more foreign buying from Japan. And the Japanese bank, which, by the way, that is not a small bank. That is like a massive, mega bank, Bank of Japan. They're holding as much debt as the entire GDP of Japan. So that Bank of Japan, as much debt as the entire GDP of Japan. So it's a massive, massive bank. So when they're going to be buying our bonds, even to hedge their own rates, that's going to increase buying, which is going to drive the prices of bonds down, which is going to then change the rotation out of these value stocks back into growth. And so, yeah, we may get 1.99, but the 2.5, which is the concern, probably isn't coming because worldwide competition isn't going to allow it. And until other countries move up their interest rates and their bond prices get better, you're not going to see our bond price go to the moon. It just doesn't make any sense. So continue to be a buyer of growth stocks, maybe buying on the dips, adding slowly to your positions, and maybe hedge yourself with a little bit of the value play. And we're going to get into that. So Deutsche Bank just did a survey. And this is interesting because we just got the stimulus check passed. And depending on where you rate and where you hang in that stimulus, you'll get a check of, $1,400 or something like that. And Deutsche Bank did a survey and said responses to the survey showed that half of 25 to 34-year-olds will spend nearly 50% of their stimulus money on stocks. That's pretty cool. And we saw this and we knew this reporting earlier. All the other stimulus checks, again, same thing. They went right in the stock market. The growth of the retail investor can't be denied. And so meanwhile, 18 to 24-year-olds among the surveys said they plan to use at least 40% of their stimulus on stocks. So that's great. So that's going to keep the market up and up and up. The VIX, by the way, down slightly today, 24.35. Safe number is around 20. So we're a little bit elevated, but not too high, and we are coming down a little. Okay, so let's look at a stock.
Stock watch.
We'll do the marketing language game. We are a technology company, and I'm going to tell you this is a foreign stock where you have an ADR. So we are a technology company which engages in online brokerage services and margin financing services for clients in Hong Kong and China. Okay, so it's in China. We already talked about the stock. It's Futu, F-U-T-U, ticker symbol. Okay, we focused on it in the past. We like it now more than we liked it then because it's oversold, or at least to a place where it's in a good buying zone. We talk about the RSI, Relative Strength Index. 0 to 100, it's a number. This thing's falling into the 40 range. It's not going to quite get to oversold, probably, but it was so overbought at one point, it's becoming a more palatable buy. What they do, Futu, they're essentially a brokerage in China. The reason their growth is expected and the reason the stock is booming is because Futu, along with one other company called Tiger, brings most of the IPOs live in China. So they're getting a lot of money, and China had a record number of IPOs last year. So Futu was right involved with 70% of those. And so the expectation is that their brokerage services have made a lot of money and generate a lot of money. So their growth is expected to be huge. Now the stock went kind of parabolic. It's a nutty chart. You look at it, and the technicals on the chart now look not so great because it doesn't really have support until like 116. But if you're smart here, you're going to add some on the down. And I'll tell you why, because they're heading into an earnings period about 3 weeks away. And so now is a good time if you haven't been in this stock, and we made a lot of money for clients in this stock. We got it around 100, went to about 190, 180, 170, did really well, bumped. Now it didn't have any support, so it fell through the cracks, and especially when these oversold growth type companies or companies that gained a lot got oversold in the last 2 weeks, Futu was a victim. But this company's kind of finding support. It bumped a bit on Friday. Today it was down about 7-8 points. Now it bumped up to about 3 down. Coming into earnings, company is going to have really good numbers because all these IPOs, record number of IPOs in China, and Futu was in the middle of 70% of them. So we got a question from Paul.
The average
we're going to talk
investor.
about this value move, the move from growth to value. And remember, this is what you need to know about the stock market. As soon as you know about it, it's probably too late. So you need to almost shift your direction again and go back into growth because it's overdone. And this is what I'd recommend. So question from Paul is, which companies in the S&P 500 have the lowest PE ratios or would be considered value stocks, right? Good book to earnings ratios, low PE ratios. We talked about this a little bit last week. So the value stocks, and here's how I'd play it, and we're going to go through a couple of these, and then I'll tell you what I'd recommend playing in this. So a couple of them, Berkshire Hathaway, the Berkshire B, this is a good investment. You're going to get all the companies that their people like. So you're essentially getting a experienced financial advisor. You're getting Warren Buffett's team to manage your money for you. Berkshire B, good investment. Norton LifeLock, Allstate, Aflac, insurance, that does really well. Regular payments. They know what they're getting. They know how to build their company. They have good returns. Not a lot of outflow, lots of inflow. Progressive, again, insurance. Cigna, insurance. PNC Financial Services, going to make money on the spreads, banking. If the Fed funds rate goes up, PNC, that's a good buy. So a lot of these companies are in that financial sector, which has done really well, which again is why we recommended the RSP over the S&P for a while, because the SPY, I should say. So the RSP, because it included more of the equal weight stocks rather than the SPY, which was the market cap stocks. That's why the RSP is outperforming. Again, it is outperforming the SPY today. So these companies, Whirlpool, Hartford Financial Services, Lennar, building company, right? Bank of New York Mellon, Principal Financial Group, financials, all have good PE ratios, and they're getting piled into. XLF is a good play if you want to play in the financials. I again think things like oil, financials are kind of overdone. Oil got another boost today because there was some attack on Saudis on one of their oil refineries. So that got a little bump today, but oil's getting overdone. So I don't know if I'd be in oil going forward. But anyway, the way you play this, because you're going to get hurt if you stay in too many of these and you're like, why did I buy all these value stocks? They got moved and I missed the move and I'm too late. Buy the IVE, which is iShares. And essentially what you're going to do is you're going to get the entire value group without having to buy individual stocks. So just buy the IVE, which is the iShares Trust Value ETF. It's done extremely well. Today it's up again about 1.4%. And you don't have to get involved in buying all these other stocks and adding them to it. The Berkshire one might be a good buy anyway. But all these other ones, they probably made most of their big move. And then we're going to get the rotation. And when the 10-year note goes down, and we expect the 10-year note, the rate to go down on the 10-year, then you're going to get a move back into the growth stocks. And you're going to be like, shoot, I missed it. So don't do that. Add something like the IVE, get a little position, so a little bit of a hedge in the value, and add lightly maybe to the growth. So hey, thanks again for another great show. Hope you guys are doing well. Send the questions to Jeffrey@jeffreycamus.com. And we'll see you again next time on Stock Smart.